Hi, Lee Phillips here. I want to talk about a topic in real estate investing called the de minimis rule for repairs. And when you do something to your real estate, it's either going to be a repair or an improvement. If it's an improvement, excuse me, chokes me all up, we have to depreciate it over the class life of that particular item. And we've got 15-year class lives and 5-year class lives and 10-year class lives and 27 and a half. We've got all of these class lives. And what it means is you put $1,000 in, you don't get to deduct the $1,000 immediately. You have to depreciate that, or you have to get 1/5 of it each year for 5 years if it has a 5-year class life, like a refrigerator or something. So the object is to get everything to be a repair so that we don't have to depreciate it. We can write it all off today. That's cool. How do we do that? Well, if it's a repair, okay. If the baseball goes through the window and I replace the window, then it's a repair. If I have a single pane window and I replace it with a double pane window, that's not a repair, that's an improvement. So the law says that, the tax law, that if we have something that's under $2,500, $2,500, we just forget about it. It is a de minimis expense. We write it all off today. I don't care whether it would normally be an improvement where we would have to depreciate it. So if my refrigerator isn't a Sub-Zero refrigerator and it's a regular $1,000, $1,500 refrigerator, I can just write it all off, even though a refrigerator technically has a 5-year life. Okay, I'm doing the granite countertops in the bathroom and in the kitchen, and that bill's going to be over. I mean, it's going to be $7,500. That's over $2,500, no problem. Well, can I do something different that would get it so that it could be under $2,500? And the answer is it depends on how it's built. If the guy bills you $2,000 for the bathroom and $2,200 for the kitchen granite, then I can write each of those off under the de minimis rule. So if I've got $2,000 and $2,500, that's like $4,500, right? And I said it was a $7,000 bill. There must be $3,000 there in depreciation. So I would have to depreciate $3,000 of that, but I could write the $2,000 off each time. Now, you go down to Home Depot, and if everything is itemized, which it is at Home Depot or Lowe's or whoever, then I can write those each off individually, basically. If I'm doing the deck, I'm rebuilding the deck, and I can break it down so I have stair treads that are worth under $2,500. I can break the railing down under $2,500. I have the subflooring under $2,500. The Trex is going to be over $2,500. What I do is I go down and I buy half of it one day and half of it the next day, and the answer is no. That's all one thing. That's cheating, guys. So the object is to get it billed so that it's in smaller chunks under the $2,500 de minimis rule. Now, we've done that. We've gotten a lot of stuff out under $2,500. There's another problem. And the other problem is this de minimis rule, the $2,500 rule, says that each year you have to file an election at the back of your tax return saying, hey, I want the de minimis rule. If you'll email me, info, I-N-F-O, at legalese, Legalees, .com, legalese.com, info at legalese.com. I will send you the language for this de minimis election. The problem is your accountant's software doesn't automatically generate this. And when you're audited, they're going to look for that de minimis election at the back. If the de minimis election isn't there, you don't get the deduction. And in some cases, you don't even get to start to depreciate it because it was supposed to be depreciated when it went into service. So 3-4 years down the road, you didn't depreciate it. You can't start that late. There are lots of problems with this. Make the election. And your accountant is not going to put it on the back. He doesn't understand real estate. And you've just said, I'm writing this off, this off, this off, this off, this off. Funny thing, they're all under $2,500. But he's just going to take them off as deductions. No, you have to make that election at the back. It's a paper that goes on the back of your your tax return, your 1040 or your partnership return or your subchapter S or whatever it is. It goes on the back of that tax return, and the auditor is going to look for it. They are fully aware of this. So, 2 parts to this game. 1, break it down into under $2,500 pieces, and 2, make sure you make the de minimis election. info@legalese.com, and I will send you the language for the de minimis election. I don't sell your email. You don't have to worry about that. In fact, I don't even have ads on these. You'll notice. I've been doing this for years. My object is not to monetize these. My object's to help people. So subscribe, and you'll get a notice when I put out a new one of these. I do about one a week. That's the goal. And so you might as well get in on it and see what we're talking about this week. So don't forget to subscribe below and give us the thumbs up and the likes and make your comments. I do answer the comments. So if you ask a question about this stuff, I will answer it. And we'll see what we can do. Suggest what you want a topic on too. I'd be happy to help if I know anything about it. My ignorance is profound though, so we'll see where we go from there. Lee Phillips talking about the de minimis repair rule.